This is our monthly broker call, and I'm Debbie Fales, Director of Marketing and Communications here at NavCap. We have this call set up on the first Wednesday of every month, and it provides the latest information about our loan programs and our broker program in particular. Before we begin, I just want to point out that you could submit questions during the talk by clicking the Chat with Everyone button on the bottom right-hand side of the screen, and we'll answer them as we go or at the end of the presentation. And just a note that I'm recording this presentation and we'll send it out as a replay tomorrow for anyone who wants to refer back to it or for anyone who wasn't able to make it today. So now I'd like to introduce our speaker today, Middie Rall, who many of you know already is our Business Development Director who works directly with our brokers. And he's going to walk through the application process and discuss recent updates to our loan programs. So let me turn it over to Middie.
Thank you, Debbie. And just want to say thank you for being on the call. I really appreciate the opportunity to continue to do this. For this month's call, April, we are going to run through just a couple things. Got a couple topics of discussion. There's been some uncertainty in overall banking, lending space, and in our space in particular, and just want to go through how we both Navigator and you, our brokers, are in a position to succeed and continue to succeed through 2023. Going to run through our current loan programs, some updates that we have for the lending options that we have, and specifics for lending options that we are able to do, mainly fix and flip, bridge, new construction, multifamily, and the DSCR rental product. Then once we run through those, I'm going to switch over and go to our website, log in as a member, and run through how we can get you and your borrowers proof of funds letters, and how to run through and visualize, running through a loan application with us. If at any point you have any questions throughout the call, please feel free to submit a question in the bottom right-hand side, the chat box. Like Debbie said, the call is recorded, so if you missed any notes, you will be sent out a copy at the end, and we'll have a question and answer period. If you don't have my contact information already, again, my name is Middie Rall. If you want to reach out to me directly, my cell phone is 443-228-8182, and my email address is middie@gonavcap.com. So let's get started. Through the back half of 2022 and up to 2023, we've had a lot of turbulence, I would say. And more recently, more in the spotlight, we had some turbulence in the banking industry overall. One thing I just want to briefly run through today is that we're going to be just fine. We're in a position to succeed. And from what we've seen so far in this year, we're going to be doing just well. And we've seen a lot of brokers uptick in activity. But, for this turbulence so far, what does it mean and how will it affect our industry? We've seen some familiar lending faces in our space either pause or stop lending. What I have to say, or what we would have to say, is that lenders who have properly positioned themselves in our marketplace and done the right deals for the right borrowers are in a great spot lending-wise currently. We have seen, really starting in December, but from January to March, the most activity in closings that we've seen since the end of Q2 2022. It's been way up. Also, broker activity, to everyone on this call, has been way up. So we really value our broker relationships, and we appreciate the opportunity to work with you. We also appreciate the opportunity to help build relationships with your clients. One last tidbit that I'd have on where we're at currently is we still have a housing shortage. And for the first time since May of 2022, home prices actually raised. If you'd like that study, I'd be happy to send it to you directly on that. But let's move into our loan programs. Overall, just want to say that things are looking up for our market. And while the job market seems to come down for this month, that actually will positively affect our DSCR long-term rates. So where we're based out of and what we lend on, Navigator Private Capital, we're based out of the Mid-Atlantic. We're based out of Maryland in particular. We lend out to Colorado. I would say large majority of our volume is down through the Mid-Atlantic, through Florida, out to Texas. What we don't do is anything west of Colorado, Minnesota, North and South Dakota, and New York. What we lend on is bridge loan, which is short-term acquisition financing or stabilization, buy, fix, and flip, or buy and hold product for 1 to 4 units. That is the exact same program. It's a 12-month balloon. The DSCR rental loans, so 30-year fixed and a 10-1 interest-only ARM for 1 to 4 unit, and we also have a 5 to 10 unit program. New construction, again, residential product. It's ground up and rebuilds. It's geared towards 1 to 4 units. And multifamily for acquisition, renovation, and or refinance, 5 to 20 units currently on the short-term notes. Moving forward into the specifics of the DSCR rental program, this is a long-term financing product for both long-term rentals and short-term rentals, whether that's Airbnb, VRBO, or whatever your borrower's platform is to utilize that rental aspect of it. It is, like all of our loan programs, a residential product, so 1 to 4 units and also 5 to 10 units. We have 30-year fixed and a 10-1 interest-only ARM. These are for purchases, rate and term, and cash out refinances. Minimum loan size on these is $100,000. It's up to $2 million. I will tell you, since rates have increased, it's hard to get a loan to qualify north of that, $1 million, $1.5 million mark. I will tell you, just this last month, we closed with one of our brokers a $1.7 million DSCR note. So if it is a winner on the aspect that it can cover on that DSCR, please don't be scared of that. And we'd be happy to see what we can do and see if we can get that deal funded. Rates are starting at 7.25. I will tell you that the 10-year bond is down a little bit today. So that is based on a 30-day lock. We'll see where that goes, but it's been hovering around the low 7s right now. These are the terms are full AM, or you could have an interest-only option, a 5 or 10 year period. YSP is available on the back. It's a 2 to 1 upsell. So we can give you the base rate. And if you want to upsell that, let's say a half, you get a 1% YSP on the back. Max LTV is up to 80%. That's for purchase and rate and term refinance. Max cash out is at 75%. This product does have a prepayment penalty, and if your borrower is looking for a shorter prepaid term, that's something that we can look at. Just keep in mind it's going to factor into their pricing. To get into the door for this product and to qualify, they need a 660 score. Please keep in mind for debt service coverage ratio products, taxes and insurance escrows are included. It's not really an option. With them not qualifying tax returns or income verification, that's something that's required for that project.
Middie, it looks like Sebastian has a question.
Sure, let's go ahead.
Hey, Middie, do you guys have the ability to add an interest-only period in front of a 30-year loan, or is it ARM or 30-year fixed?
No, Sebastian, that's a great question. So we can do a 5 or 10 year period on the 30-year fixed. So let's say they wanted to do a 5-year interest-only period. Keep in mind, taxes and insurance are always going to be escrowed on that, so it would be ITI. But we can do 5-year ITI, and then the rest of their loan can be AM'd over 25 years. And if they have a 5-year prepay penalty, that's something that they look at juggling both those. But they can do a 10-year as well.
That's good to hear. Thank you.
Yeah. Thanks for the question. Moving over to the bridge loan program, this is a short-term acquisition program, really. It doesn't finance the rehab aspect of it. There's some practical applications that I thought of mentioning. If the borrower wants to self-fund the renovation and they can show that they have the cash and or ability to do that, absolutely. They have a short window to complete a transaction. They have a week and a half, 2 weeks to complete a deal, and they just want to get in the door. That's something that we can look at. They want to pull cash out of a completed project. Again, something we'll look at. They want to acquire, stabilize, and refi down the line, whether that's conventional or DSCR. That's a fit. And lastly, if their current loan term is maturing and they need additional time. One thing I want to just mention on that, we want to stay away from buying a potential problem down the line. If borrowers are getting extremely tight with cash and the project isn't working out, but for the right borrower, right score, right property, that's definitely something we'll look at. I would say generally this is the easiest loan to complete because we're looking at just the as-is value. We're not looking at value add renovation. These appraisals that we have for bridge and fix and flip, even new construction to a degree, they're coming back in 3 to 5 days. So it's generally the easiest and fastest loan to complete. There are always exceptions to that. So if there's a weird deal and it takes a little bit longer, but yeah, they're generally very easy to do in our space. Minimum loan size is $75,000. Terms are up to 12 months. Keep in mind it's a 12-month balloon. Interest only payments the whole way. There's no prepayment penalty. There's no escrows for taxes and insurance. There's no reserve requirement like you may see in a DSCR product. Rate and term refi is up to 70% max, cash out up to 65%. These are fixed interest only rates. And like all of our loan products, we're not qualifying on income or tax returns. Want to move over to the buy, fix, and flip and buy and hold program. This is a single family product. So it's residential. It's for 1 to 4 units.
Middie, I don't want to interrupt, but it looks like we have another question. Horace, do you have a question?
Sure.
Yes, quickly on the bridge loan program, what is the minimum credit score?
Minimum credit score, I would say about that 650, 660. If the borrower is experienced, more experienced, we're going to take a look at that credit report and we're going to look at more than the score, right? If they're at a 640, why are they at a 640? Are they highly leveraged? Are they missing payments on revolving debt? Have they missed a payment on their primary, etc.? But I would say really that 640, 650 is the floor to get in the door on that. I hope that helps.
It does. Thank you.
Yeah, no problem. Back to the fix and flip. Minimum loan size is 75,000. Again, up to like 3 million is a good number. Rates are starting at 9.75. I will say generally, rates are going to be starting in the mid 11s, to 12s. But if your borrower is extremely rate sensitive, I have a program where we can buy the rate down to 9.75. It's actually a point to buy it down. The 2 points below that, rehab budget size matters and location matters. Rehab budget size matters based on the borrower's overall profile, right? And generally, the smaller the amount of rehab dollar-wise compared to their purchase price, generally it's viewed as less risky. But it also correlates to what has the borrower done before. Have they done a few rehab budgets or have they done a few rehab projects where they can show that they've done larger size rehabs? Or is it a first-time borrower looking to do $120,000 in rehab? So that's just going to factor in how we look at the deal. Location matters. I would say generally we're looking at urban and suburban properties. No real small towns or outlier properties. We're looking for subject properties that the large majority of America could qualify to live in and, generally would want to live in, with their family. We have terms up to 12 months. This product does not have a prepaid penalty. We see that a lot of our borrowers find value in looking for off-market deals or auctions. That is definitely something that we work with. And, if you have a borrower who's had a problem, getting financing due to working with a wholesaler or an auction, let's run through it and see if we can help. Loan to cost leverage is still up to 90% purchase, 100% of the rehab. I will tell you that's for a borrower, at least 5 flips, at least a 720 score and a good property. This fix and flip program is available to first-time investors. There's no experience threshold to get them through the door. And lastly, a cap on the loan amount, the max LT ARV or loan to after repair value is at 75%. Keep in mind, that's a cap, not how we would actually structure the deal. We're going to look at the loan to cost up front. For the new build program, this is for new builds, tear down and rebuilds as well. Again, a residential product, minimum loan size of $85,000. Terms are up to 12 months. Gonna need a 680 score, get in the door. Max LTC on this is at 85%, and LTARV cap is at 70%. Excuse me. Rates are really starting at 11.25. To qualify for this program, a lot of what I've seen from whether it's just client direct or through our brokers is the bar to entry is here. It says 3 new builds in the last 36 months. If they have 2 new builds and another project or 2, let's say on a fix and flip side, we can look to get something done with them. But that is the greatest barrier of entry to get qualified for this program. Non-Dutch or paying only on drawn interest funds for a new construction lending option is available. It costs a point at close. Really, the reasoning for this is we have this money sitting there and we're paying for it monthly. That helps offset the cost. Lastly, for this program, we get some requests for some larger luxury new builds, $2, $3, $4 million homes. While we would love to do it, the loan program just really isn't geared towards those type of homes. Again, looking to have a back-end market that the large majority of America could qualify for and live in. Moving over to the multifamily loan program, this program has had some fluctuation in units and loan size, etc. Over the last 6 to 8 months. We see it settling down a little bit, especially on the secondary market. This program is really geared for up to 20 units, purchase, refinance, and rehab. I will tell you, the mixed use and the commercial funds, it's not really there. This is really more for a residential up to 20 unit property. Minimum loan size is $250,000 to $3 million. If you're looking at an acquisition loan, I would say the minimum as is per unit is probably around $75,000. It's not probably, it is. If you're looking for value add, minimum as is value per unit is probably 50 to 55, somewhere around that ballpark. Rates are starting at 11.25. This is up to 18-month terms. Again, there's no prepay. They need a 700 score. And whether they're looking to just straight up purchase or value add, the max loan to value or loan to cost is 75%. These properties need to be in a major urban area, and the borrowers need to have experience with previous multifamilies based on what they're looking for. So if they're looking for a 20 unit, but they have experience with 5 single family homes, maybe a little bit of stretch for them to look for financing on that. But again, happy to run through all scenarios and see what we can do. Now that I've ran through the lending options, I want to run through going on our website and submitting proof of funds letters, seeing how this process works, and just getting you acclimated to our portal. Because the biggest thing is we want to build our relationship with you. We want you to become comfortable with using our portal. Keep in mind, if you have any problems directly with the portal or submitting something, feel free to give me a call. Here's my contact information down below. I'm happy to run through it. Just give me 1 second. I'm going to stop sharing this. Now, can you guys see this screen? Debbie, can you see the navigator screen?
Yes. Mm-hmm.
Okay. So if you don't know, our website is www.gonavcap.com. This would be the page that you would go to. You've already signed up with us on our broker program here, and most of you, I believe, would have already created a member account. To log into your member account, you go to the top left-hand side, click log in. Hopefully you remember your password, and it's going to show you a My Account page. Keep in mind, we have you registered as a broker already. We have your brokerage registered within our system, and your information should show up on the left-hand side of the screen. If your borrower is looking to get a property under contract and they want a proof of funds, one of the main things that we utilize is you can get these proof of funds letters 24/7. They're specific to the purchase price, they're specific to the borrowers and their entity, and they're specific to the property themselves. So let's just run through briefly a scenario here. Borrower is looking to buy a property for $250,000. They want to do a fix and flip project. Let's just say, for our sake, it's in Annapolis, Maryland. Please describe your project. This is really just for our information based on what your borrower is looking to do. It doesn't have to be a Pulitzer Prize winning description. If your borrower is looking to do a fix and flip, that's really all I would encourage to put in. Now, one thing where a lot of our brokers get caught up on issues with the portal or proof of funds or even an application is that it will typically auto-populate your name and your company in the contact information. Like I said before, we already have you and your brokerage registered. So the contact name would actually be the borrower's name, Smith. Our entity, let's just say fix and flip. Let's see. And your contact email will always be in the email for the applications and the proof of funds letters. It will not allow you to change that, actually. So why we have this set up that way is we always want the flow of information and pricing, etc., to go from us to you and you to your borrower, unless there's some extenuating circumstance where you need us all to get on the line, on the phone. Also, we realize that, working with your borrowers, you may be in contact with the borrower's other representation. So if you have a realtor, the borrower has a realtor that wants to be CC'd on an email, and that's something that you're willing to do, that is something that you can add in through there. But it's really simple. You just submit this. Should take a second. You go to my email here. It took me 7 minutes to get my proof of funds this morning, but this is what it looks like. Oh, I gotta stop. Let me share my other screen, sorry. This is what your proof of funds letter should look like. So it details your borrower's entity, their name, the property address, and what they're looking to buy it for. We have seen some proof of funds letters, or if you've seen them through other formats, it may say up to $500,000, but they're offering $250,000 for the property. Don't feel like that is useful to our borrowers in their case. So let me stop sharing this and go back to NavCap. So now that you've submitted a proof of funds request, let's say your borrower wants pricing and you want to do pricing on the same deal. So let's say Cash Street, 755 Cash Street is a single family. They're looking to fix and flip the property. John has a 680 to 700 score. And let's say he's done 2 flips in the last 3 years. Buying it for $250. Let's say the as is 250. He's got $50,000 in rehab costs. Getting pretty good lift on this. Let's say his ARV is 385. And it's just a fix and flip. 50. Just submitted the proof of funds letter, so no, it's not under contract. We'll auto-populate your name in here again. Keep in mind, you want to put the borrower's name and information in here. And your email remains the same. So once all the fields are filled out, just want to click the submit button. Give it a second. And once it's submitted, you should see this pre-application screen. Now, it's just going to run through the next steps on what to upload, uploading docs, inputting title company information, etc. But really, the next step that we would see is I'm going to get this application in from you, and based on the information that you have provided, I will get you over terms. I'll usually give you a call to follow up, see what the borrower is looking to do with their file, what their appetite is, if they're looking for anything in particular, and then get you over a full-blown term sheet. Keep in mind that, these terms that we're going to send you over are based on what you put in. So if John Smith actually has no flips and a 650 score, terms are going to be different if we can do it at those score and experience than 2 and 680. Also, if John has 4 deals done and he has a 720 score, rate and terms are going to look different as well. But yeah, that's the application process. If you have any questions or want to run through it directly, with you and I on the phone, I am happy to help. Anything that, we can do to develop our business relationship, help you get comfortable with us working with each other, and just help each other do more volume, I'm happy to do. Debbie, I'm going to turn it over to you if we don't have any questions. Again, my name is Middie Rall. My direct contact information is 443-228-8182. My email is middie@gonavcap.com. If there's anything that I can do to help or you need anything from our end, please feel free to give me a shout or shoot me an email. Thank you.
Thanks so much, Middie. And does anybody have any questions before we close out the call? You can raise your hand or put it in the chat. Just a reminder that we are, that I'll send out a replay of this call tomorrow. So that will come through your email. So you can check back and make sure that you get that. And our next broker call is going to be the first Wednesday of May. I believe that's May 3rd. So put that on your calendar as well. So thank you so much to everyone for joining us today. And we look forward to next month.
Thank you so much. All right.
Thanks, Middie.